Hello. I think we'll get started now. See a good number of connected. See some more kind of trickling through, but that's all good. And yeah, for those that don't know me, I'm Sam. I head up the account management team here. I see some familiar faces on the call, and yeah, it's good to have everyone today. We're going to be running through how to kind of create reports to the top tier client. We're going to focus on building a set of management accounts really in Future Advisor, certainly including a forecast and also looking at kind of comparisons against that. So hopefully it's a useful session today. And obviously, you can see I'm working from home. We're getting a delivery in a minute, which my wife's going to kind of sort out two new chairs. But I've got a little dog that likes to bark at lots of things. So if we do hear some barking halfway through, that will be him going nuts for the delivery guy. But if anything happens, for whatever reason it drops out, not that dog will bark that loud, but internet issues, for example, not that that's happened yet, then we'll just restart. But hopefully that doesn't happen. Obviously, feel free to use the Q&A function as well in Zoom. I'll probably come to those questions at the end. We've got the full hour, which we probably won't need the full hour. These are normally half an hour to 45 minutes. But yeah, certainly feel free to ask questions as we go, and we'll certainly come to them. I will also record this session and send you out the recording following today. So you should have everything, as well as any material, like probably just attach the report that we create. So you can have that as a good way to kind of check back. Cool, so I think I'll get started. I see some more joining through. We see hi Sharon, Kim joining up now, which is great. And yeah, let me share my screen and we'll jump into it. Cool, so hopefully you can see my Futurely account now. And what we're going to do firstly, as always, is go to the organizations tab. That's where we can then see how we can connect up a client. Take it right back to basics, just so we kind of cover all grounds for whoever's on the call. And to add an organization, we click add organization here. This is where we can then sync with the two cloud offerings, or MYOB if you're connecting all the way from Australia. We can also consolidate as well, so you can report on a consolidated level. Sage, unfortunately, isn't coming soon. That will be removed soon, however. But the create manual organization is the way that we do that. So we'd upload the data yourself. Once it's in, we're exactly the same way. But if we're working on the cloud, all we need to do is connect, and it'll then sync, and it'll take a few minutes for it to sync, and it'll then, as this is here, sync every single day automatically. So there's no need for you to kind of manually pull that data through. If you do an update in Zero now and you want it to come through now, you can click sync now, and it will pop through. When it's then synced as well, just quickly, I'll just show you how we can like do some grouping and chart of accounts structuring. You do that in this area where we can then create groups like I have here using the move/group option. If you tick it, it'll then appear for you to use it. So we've now synced the client, we've organized the chart of accounts however we need to. We can now build that report. And as I mentioned in the kind of blurb of what we're covering today, then we're going to be including a forecast, because certainly at the moment when things are so uncertain, including that budget forecast scenario is going to be useful for the client. So we're going to use the forecasting section. So in here, we can then see all of our clients that we've got in our advisor account. When we first create a forecast for a client which we haven't built one out before, these settings will appear. So these settings then are for us to enter in the kind of default settings. So here we've got the VAT details. So it will come to begin with as do not pay tax. So if they're VAT registered, we'll then whack it to the period that is correct for them. We'll then put in the last day of their current VAT return, how many days after that return they pay the VAT. So normally a month and 7 days for over here. And so we'll put 37 and then 20 there as the 20% default tax. Then on the right hand side, we've then got our default accounts. So we've got to find our account receivable account. In this case, it's quite obvious because it's called accounts receivable. Sometimes they might call it debtors or debtor control account or whatever it is. So that's why we're looking just for that default one, so we can tell the system which is the correct one. So do that for all the others, and we can then click save. Once that's done, you don't need to amend it unless you need to, but it's just kind of once and done really. And then we'll then be able to jump into the forecasting area by clicking new. So in here, we then have a variety of options to build our forecast. We've got the create from scratch, so that's kind of working from a blank canvas. You can always use the what if scenario as well, so you can link two scenarios. So you have like a baseline budget, and then what if we achieve something else, and they're kind of interlinked, which is really useful. Create from CSV import. So if you've got a pre-existing budget and you want to upload it, you can use that one. You've got the create from a copy, which is just copying one that's already in Futurely. And we've got create from last year's actuals. So we're going to use this option, the create from last year's actuals, and we're going to effectively build a budget that would have been starting a couple of months ago from September. So we're then going to build this report as like the last quarter, the last few months compared actuals versus budget. So we're going to use the quick create option on the last year's actuals. We're going to call this budget. We'll leave it as a 2-year. Like I said, we're going to start this budget back in September. And then click build. Cool. So that's built out our scenario to begin with. Within a few seconds, we've built out that 3-way forecast. Firstly, because we've put the start date for the forecast or budget back in time, I'm going to turn off the actuals. So at the top right, you can see the actuals on period until the end of the last period. If we turn them to never, that means we just work with the kind of forecasted figures rather than actuals as they come in. So if we then scroll down, we can then see where these figures come from. So this 173,000, that is September 19's figure. Same with October 20, that's October 19's figure. So effectively, we've taken last year's P&L and applied it to today's balance sheet. So as if there are no changes to the P&L, this is what it would look like. So if you had the same year again, this is what it would appear like. But obviously we know that the years were different, and this is a budget that maybe the client's been working to for the last few months, but now they need that comparison. So we're going to effectively replicate and build it in here. So we're going to open up income, and then open up a category, so wedding, for example. And we're going to maybe assume this is a pub or something that's been shut, or a restaurant. And what we're going to do is take out the few months of income here, and then look to decrease it moving forward to kind of replicate what they might have thought at that point. So I think we went into lockdown at that sort of point. So maybe they built out a budget to see, okay, how am I going to be able to navigate my way through this? So if we open up that category and then click on the edit here, we can then see these figures in here. So like I said, these are just last year's figures, but we're going to take out all of these and put it to 0. And then we're going to reduce maybe January and February to 50% of the figures then, to then kind of show a staggered return to where they would expect maybe from March. So we're going to repeat that for the other ones in this category. So just simply click edit on the account, change these to 0, and then change the next 2 months to 50%. And we'll just continue with the others. And then the final one, just so we can kind of finish off that group. I change them to 0, and then January and February to 50%. Cool. We'll see down here as well, if this is our kind of first time looking at the forecasting area, other options. So this is like store on the first, meaning when is the invoice going to be raised, which we can change it to be a different date in the month if need be. If you're reporting on a monthly basis, it's maybe not as needed, but certainly you can change it to be as accurate as you need to. Default VAT rate, 20% applied there. We've then got payment profiles down the bottom. So this would be their credit term. So you could have a 30-day credit term on there, for example, or you could get split over multiple days. So maybe in 3 days, they're going to get 10% of the invoice, and maybe in 90 days, the remaining, what would that be, 90%. That staggered credit term there. If we then hit on these override journal defaults, we'll then see those journals working. So we can see the kind of fully integrated three-way forecast working here. It's accounting for our debits and credits on that first post, accounting for that VAT movement, and then hitting the balance sheet as we go through those months then. So it's quite good to get familiar with this area in future if we do then some more complex areas, such as like wages or just reversing of journals. We need to understand how to use this area, but it's also good to check that we are happy with the journals that it's posting there for us, because there's no need to post again. It's just doing it all in one hit here. So if we're happy with that, we can then click save, and it will then zero off them, and then obviously apply that credit term to venue hire. Cool, so that's that first amendment to that pre-existing budget. So no income for the first good few months, as the client was kind of predicting that's going to be the case until Christmas time, and then a 50% reduction up to normality in March. And then what we're going to do is apply a bounce back loan into here, so we can then see, so this client got one in September, and we're going to start to add that in. So if we then go down to our non-current liabilities, we can see the bounce back account. So obviously if you don't have one, then you just have to build it into Xero QuickBooks or add it into Futurely. This client obviously has one ready, so we can click on the plus next to the bounce back. And we can then use the loan and amortization wizard. So again, a nice wizard that allows us to do all the postings in one area pretty much. So we're going to put in here that the client got the full 50,000. And the interest rate, I believe, is 2.5%. And the account that tracks that is interest, funny enough. The account, which is the loan is paid into, is the default current account, which you can change if need be, but we're going to leave it as the default. The date received, we're going to say we received on the 1st of September. And we're going to have the full term, so we're going to have the full 120 months here, so a 10-year term here. But the first repayment is going to be a year after, because I believe it's 0% for the first year. What was the date of the 1st of September? There we go. So September 21 is what I'm looking for. Perfect. Cool. And we're not going to have any fees on the loan. It's simply just the 50K for the full term of 10 years. 2.5% is going to be applied. But obviously, because this was built before kind of the bounce back loan was available, we need to do one extra post to effectively negate the remove the interest in the first year. Because if we see that's 50,000 is in there, perfect. If we go up to our other expenses and have a look at our interest, we can see that we are paying 103 each month, which we don't want to do because the bounce back obviously comes with 0% for the first 12 months. So if we click on the plus, we can then use simply the manual journal and put in 103 here. It's going to be beginning on the 1st of September. And we're then going to be transferring to the current account. So we're going to effectively take the money out and put it back. So we're not actually kind of paying the interest. Monthly, and we're going to repeat it every month, and it's going to end after 12 months. We then hit save, we'll then see that here. Perfect. So it's now zeroed through there. And then if we then went into our bank account, we'll see that we've got the bounce back through here with 103 taken off, but we then put the 103 back in as per the interest. So now that's our bounce back. We've also obviously amended the income. And obviously, as I suppose it's worthy to note that we've got this little kind of collapse or rows. It's always handy to know that. But this area is a P&L and a balance sheet kind of sitting on top of each other. But you can then view them independently by clicking on the P&L, the balance sheet, or the cash flow. And we can view any of the areas, any of the accounts by opening up the category. We do all of the editing, however, in the Workings tab. Cool. So that's our kind of budget that we're going to work with. Obviously, you can then add in all sorts of other bits, link cost of sales to income and amend whatever might be required for that budget. But we're going to leave it there as a good starting point for that budget. What we're going to do now is build that report at the back of it. So for this, we could use the boards, which is that kind of live interactive feature where you can invite the client in and they can see this, or you can use presentation mode and then like really walk it through with them on screen, for example, if you're doing like a Zoom meeting, which can be useful. But we're going to use the maybe more old school and traditional approach of printed reports. So in here, you're going to see all the ones that you've built out to begin with. So these are just ones I've been working through. But we're going to click New Report, and you then see the kind of main settings of where we can start from. There's loads of templates, which certainly is worth having a little scan through to see if any of them are useful. But we're going to effectively build our own and then incorporate some templated work into it and also some kind of tailor-made reports. So we're going to start from a blank PDF. And we're going to call this actual versus budget report. We're going to select our organization, which is our Real Story Productions, and our period ending is going to be November. So you can change that if maybe we're only doing a report until October or whatever, but we're going to leave it as November and effectively assume that the month's been closed off, or either way, when the actuals come through, we can just refresh the report and send it out. So November, we're then going to select the relevant scenario. If we've got multiple, of which we can see I've got a few here that I've been working through, but we're going to leave it as the one called budget. That's the one we just used. And then click confirm. Cool. That's our default settings. And we can then click on the plus to open up our first page and start to work it. We've got lots of different layouts here on the right hand side, which certainly is worth kind of scrolling through and seeing if any of these are more suited to what you're going to work on. But in this case, we're going to leave this as the layout which we're going to use. So we're going to use a template in the bottom section. So then see on the right hand side all these options that we have. We're going to search for a profit and loss comparison. Cool. That's going to load as a chart, but what we want is a table. So we click table. Now it's starting to form a little bit kind of like we would think really for a P&L comparison. If we then go down to our date range, we can then change the date accordingly. So as I said at the beginning, we're going to effectively do the last quarter compared. So if we click on the use default date and the previous 2 months, that's then going to be November, October, and September. And if we then go to comparison options, we'll see the default for a comparison is year versus year. So that means comparing November 20 with November 19, for example. What we're going to do instead is actual data against the budget. So we've now got the two compared there. And if we then scroll down, we then got a variety of other options. If we use the column formulas and open that up, we'll see that we have the percentage variance and the currency variance. You might be able to hear my dog in the background. I did warn you, the dog is going crazy, but hopefully this headset's all good. And yeah, both of them are selected, but we might not want both all the time. Maybe we just want the currency or just the percentage. So in this case, I'm going to turn off the percentage and just use the currency variance then, which should load any minute now. When that does eventually load, what we're going to do is actually add, there we go, a total on there as well. So we're going to use a financial year to report end total. And the reason why we go for the financial year to report end rather than to date is that report end means it goes to the end of November, whereas to date would be to today's date. So if we were, for example, doing a report with a month end of, let's say, October, to date would go to today's date, even though it's after October, if that makes sense. So it's worth using to report end most of the time. So cool, we've now got that comparison there. We can now see the differences between the actuals and the budget, and we can then start to use that as a nice comparison. And we can see here, however, that I was looking at the kind of income, that it's showing actual data, for example, is 19,000 for the month of October, but budget is a lot higher, and it's showing as a positive. So this time we want to invert the comparison. So it's then looking as it is there. So it's showing but actual data is actually obviously worse in this case than what we've budgeted there. It really depends on which way you're comparing. So if you maybe got budget as your first column or actuals as a second, then you might need to invert accordingly. So yeah, just the way I've laid it out, inversion is the way to go. Cool, so we then got a comparison there. If we then use the table cell width, we can then just enlarge it so it fits in the space nicely. So just that. Cool. That's our beginning. We've got our P&L comparison. We're now going to add some visuals to help explain it even further. So at the top left, I'm going to use a new chart. What I'm going to call this is income comparison. Cool. We're then going to select the comparison chart on the right-hand side here, so we can bring up that comparison. Then going to add the date range. I'm going to use the same date range as I did down below, so custom or default date of November, and then the previous 2 months. And then if we go down to comparison options, again, I'm going to select actual data versus our budget. And you'll see it will load as it catches up, depending on how strong your internet is. And then finally, if we then go down to rows, we'll see that we've got income there already. So that's just because whenever you build a chart that's not a template, it'll give you income so it can load. If you do something else like expenses, you can just add expenses and then delete income. But in this case, we're doing an income, so that's fine. We can leave it there. But we're going to change the chart type by clicking on this little chart symbol. It's next to default row settings, and change it to a column. Cool. So we've now got that comparison then. So a nice difference between our actual data and our actual data. It seems I've selected actual data twice, it seems, or just budget. See if it's going to catch up. There we go, that's better. Cool, it's actual data against budget. Then click done. That's a nice comparison there, so we can see the figures accordingly. And now we can then add a couple extra visuals in here. So I'm going to do another new chart. I'm going to call this time a cost analysis. And I'm going to do this on actual data. So I'm going to do cost analysis on actual data and cost analysis on our budget, so we can see how they kind of compare. And if we then go down to our date range, we're going to select the same date range as before, but we're going to change it to a proportion card. So then it's a pie chart, obviously. And the reason why I put the subtitle in there is because on a pie chart, obviously we don't have an axis, so it's worth kind of just telling the client exactly what we're looking at. Then go down to rows, we'll see incomes there, but this time we're going to click see all and select our costs. And then delete income. Cool, so now it's loaded up. But we want to then drill in a little bit further. So if we open up the category and then change the display on the chart to first level group and accounts, that will mean it will take account of any grouping that we've done and then any account that's left over. So we can really start to see not just the category of expenses, all the accounts, all the groups that are within that. So it gives a lot better detail. Perfect. And then finally, by clicking on the little chart symbol, I'm going to change it to a donut. There's no difference other than the visual of it. I just think the kind of donut's a bit better. No jam donut, unfortunately, just a normal pie chart donut. But yeah, I think that looks a bit better. Cool, so we've now got that. And what we can do, because we want to do the same, but just with the budgeted figures, I'm going to click copy and then paste it across to the right. Then all we need to do with this is then change the data source to the forecast data, and it'll then load up our budget there accordingly. Perfect. So now we've got our page completed, other than the fact that it says new page there. So we're going to rename this profit, if I can spell, profit and loss. Perfect. Click save. And then it's worthy to note in these printer reports, it's worth just getting into the habit of clicking save. It does save automatically. I think the first one you might have to save yourself, but it's always worth saving as you go, really. The boards kind of is live and it's always saving. The printer report is just worth doing that. You don't want to lose any work that you do. Cool, so that's our first page. What we're going to do is add another one. So in here, we're now going to do a balance sheet comparison. So again, we're going to use a template, and we're going to call this, well, so it's a balance sheet, but it's just there in front of us. We're going to select that. And as before, it will load. Change it to a table. Cool. Go down to date range and then select the same date settings before. So default date, previous 2 months. So that's the 3-month period. And then down to table cell width, and we can then expand that out. So I'm going to leave this with the 2 variances this time, just because I want to, and we got those 2 there. What we do want to do though is change the comparison options. So it's looking at the last 2 years as it does by default, but again, we want to look at actual data versus the budget. Cool. And then that's our nice comparison there, but we can see the budget is showing that in, for example, in September, we've got more money in the budget, but less money in the actual data for the bank account for 327 versus 341. So again, we need to go down to our column formulas and just invert both those comparisons. Perfect. So now just double check. We've got budget of 341, which is showing as lower there. So yeah, perfect, I believe. Cool. So now that's kind of balance sheet comparison is added in there. We can now add the other kind of visuals to go alongside it. So what we're going to do is add up here a bank balance comparison. And if we use a new chart, again, we're going to select a comparison. We're going to call this bank balance. Cool. And we're going to go down to date range. And we're going to use the month of November, and again, the previous 2 months. This time I'm going to select the comparison options first to be actual data and against our budget. Cool. Then down to rows, we've got income there, but again, just going to search this time for bank accounts and then delete income. It will load. It always does that with bank accounts for some reason. There we go. And then we can then change it to be a column. Perfect. So that's our actual data against our budget, and we're now being able to compare against the 2. Cool. And then what I'm going to do then, alongside the chart to the left, is put in a kind of bank balance analysis per account. So I'm just going to use 2 charts at the top here. So I'm going to change the ordering by scrolling down to find a different one. I'm going to use this one here. We can then select our balance sheet and whack it down the bottom. I'm going to put our bank balance at the top and click Update Layout. Cool. Now at the top right, like I said, we're going to do that bank balance analysis to see how many bank balances we've got within the bank account category. So if we use a new chart, I'm going to call this bank balances or bank accounts maybe. Cool. Date range, same as before. And then we're going to go down to our rows. We're going to again select bank accounts, delete income. We can see it loading up. Perfect. But we're going to then change from this category, so that means it's going to just display the bank accounts category, the full figure there, and change it to all accounts. So any bank account within the category of bank accounts. And then I'm going to change it to be a bar. Cool. So we've now got our 2 bank accounts shown there. And it's probably worthy to know, I'm just going to whack a subtitle on there, just maybe last 3 months. Because we've mainly looked at comparisons through it, like actual versus budget. This is not a comparison, this is just simply the last few months. So it's maybe worth kind of clarifying that for the user. Cool, and the only final thing is then to whack on a title. I'm going to call this balance sheet. Cool. Then hit save. That's our kind of P&L on our balance sheet page now. What we're going to do is actually add in a pre-built page, and we can do that up here. So there's loads of templates in here. We're going to use the cover sheet which is probably going to be used on pretty much any report that you build out. You can then edit this cover sheet, and you can put your own logo in by clicking on the kind of finder here, and it will search your computer to locate it. And you can kind of amend any of this if you need to, but it's kind of a pre-built template, so you can kind of get head started with your cover sheet. We then also got the executive summary. So this is a kind of 2 text boxes, which you can then simply edit and add in your own commentary accordingly. So it's just quite nice when the client opens the pack to then find your key findings and anything you want to highlight for the client. And we can then reorder the pages by clicking on move and dragging it accordingly. Cool. We're then going to use another pre-built page. This time we're going to use a KPI page. So you'll see there's loads of pre-built ones, not just kind of cover sheets, really other ones to get head started to what kind of we've been building out from scratch. And in this case, I'm going to use a KPI month versus last year comparison. Cool. So we've got straight away a nice kind of 4-pager there. Rather than looking at actual versus budget, this page is looking at the month of November 2020 against November 2019 over a variety of different kind of metrics, from P&L to balance sheet to loads of different performance KPIs. We've got net cash flow, and then we've got cash on hand, the money in the bank, compared for the last 2 years. So a really nice one to kind of dovetail the 2 pages we've done together there at the end. And then finally, what we're going to do is a forecast cash flow page on the final page. If you look on the plus here, you'll then load up. I'm going to change the layout just to be 2 equal segments like that. And I'm going to jump ahead of the game and rename this page forecast cash flow. Cool. So what we're then going to do at the top is click on new chart. I'm going to take out the title because we've just got the title above, and there's only going to be kind of a forecast cash flow on this page. But then going under date range, I'm going to use November and then the following 11 months. And if we go down to data source, we're going to select forecast data, and we're going to select our budget there as default. So we're just going to be looking at the budgeted figures which have been inputted in there. Cool. It's taking its time to load. Okay, so that should catch up as I just continue through. So forecast only data, budget, we've got income added there. What we want to do, there we go, is add obviously the cash flow elements. So we're going to search in here to be opening bank, closing bank, and then net for our net cash flow. And then we can delete income. So then got those 3 added there. And what we're then going to do is change the way that the chart is kind of visualized. Rather than having them as 3 separate lines, as you can see there, we're actually going to have it as a column. And then we're then going to have the net cash flow working over it as a spline, such as that. So now we've got a forecast cash flow that's looking ahead 12 months. So we've done the comparison for the last quarter. We've also looked at this month versus last year's month, and we're now looking ahead based off that kind of budget that's been built in. Cool. And then I'm going to copy that and put it down the bottom. So what I'm going to do is change the bottom one into a table. There we go. And then finally, just open up the categories, table cell width, just so we can fit it in nice and smooth, so it's in that area neatly. Perfect. A bit too far on the right there. Stickler for making sure it looks just right. We'll go with that one. Cool. That's our forecast cash flow to finish for the pack. And the only final thing is obviously hit save, as I said, and that will ensure that the report is all good to go. And what we can then do is hit print, which will then export the report as a PDF, which we can then have a look at the finished article. And this is what we'll then send out to the client, and then print out or email out, however is required. Let me see. This is our report, which you can then scroll through and have a look accordingly. And then also what we can do, we've managed to open up again. Move the Zoom things out the way. The fun of working on Zoom all the time. Oh, hello, what's going on here? Right. So now we've kind of built that report, what we can do is also copy that report for another client, because obviously, as I said in that blurb again for what the webinar is all about, it's about using templates from client to client. And if this is a really good kind of actual versus budget report that you want to use for someone else, all we need to do is click duplicate. It will then copy that report. We can then change the organization accordingly. So let's go for, I believe this is one here, so Ricardo Fuller Limited. To again select the forecast accordingly, so forecast 2020. Click confirm, and we then got a fully working report there. We'll then need to go through and tweak maybe charts that are relevant for the client. So I think I've picked another example here that doesn't have much data here. It looks like my P&L is pretty much blank, but we would then go through and tweak them accordingly. So say, for example, the client wasn't concerned about P&L items, we can just build a balance sheet page. Like I think this client's got, balance sheet items. You can then just use that accordingly. So tweak it from client to client, but at least we've then done the heavy lifting and the kind of legwork by setting up that original template. And you can then flip that from client to client and just tweak accordingly. It's the same thing that, say we've sent that report out, you can then change the date to be December, click confirm. Maybe when you sent it out in January, I imagine you won't be sending it on New Year's Eve. If you send it out in January, click confirm, you'll then pull through that date all the way through to December. So again, there's no need to reinvent the wheel and just build the same report out. We can just use that as a report that we then just take from month to month. And obviously you can then add and tweak it from whatever the client needs accordingly. Cool, so that's pretty much what I wanted to cover today. I saw a couple of questions come through, so by all means do chuck them in the Q&A function right now. And I'm certainly happy to answer any of those questions. Like I said, I'll send you the recording and I'll send you the document that I went through, the bit report. So hopefully you use that from inspiration or whatever is required. Cool. And then one client, one person has asked in regard to the forecasting, is the forecasting a full three-way forecast? And so, yeah, it is. It looks at the P&L, the balance sheet, and the cash flow. It's fully integrated, so there's no need to kind of just focus on cash, for example. Certainly, the full business approach, I think, is required in these times when accuracy is so key. Another client has asked, or the person, sorry, I keep saying client, partner, most likely officially, has asked, how does the VAT work in the forecasting? So it works based on the settings that you've stipulated in the forecast settings when we first set it up. So it'll be on a quarterly basis. So therefore, if that's what you put through, you'll build up the VAT on that quarterly basis and then pay it off a month and 7 days after, such as the details that you put through. You can then also put in like VAT deferment, which I think I covered on last week's session, and certainly make it applicable to the relevant expense by turning off VAT for wages, for example, or changing the VAT accordingly. But yeah, the default will be set up and you can then work it from there. Cool, so I think that's the only couple of questions that came through. So I'll send you, like I said, all the information, the recording and all that. If you've got any questions at the back of it, feel free to chuck us a message. The account management team and myself will be happy to help. And yeah, next week's session is the last one of this year, actually, because obviously Santa's around the corner, and I'm sure a lot of you guys are going to be taking annual leave and all sorts. But next week's session is on the kind of the thorough walkthrough of the risk assessment piece that we're working through using Predict as the backdrop. So a really exciting one, and it'll be good to kind of walk through that with you. And yeah, any questions, like I said, just reach out. Speak to you soon. Have a good evening now. Thanks a lot. Bye-bye.